I like it. Let's go.
Episode 4. Man,
Getting in the
we are,
groove.
you know, there's certainly not a shortage of things to talk about. It seems like every week it's ramping up for us. I think when I've done podcasts in the past, it's been like, okay, what are we going to talk about today? Kind of have to fabricate things, but the market and the world is just providing us more content than we can handle. We can do this every single day and not run out of content.
That's for sure.
I
That's
know.
for sure. Even all weekend.
All weekend.
Yes.
We don't even know what we're getting into tomorrow, right? We're
Yeah,
gonna wake up and it's gonna be busy. It's gonna be busy. That's a
for
good
sure.
thing.
Yeah.
We're young. We're
We're
young.
on. That's it. We can do it.
That and you know what? That's what we have over most of our colleagues, most of our competitors, as far as the investment world. Like most advisors, they're like 65 years old, right? So they're just
Yeah,
waiting.
that's the average age. I think is 59 right now. Yeah.
59,
Yeah.
right?
Yeah.
And yeah, so that's crazy.
Yeah.
But yeah, there's no way they're keeping up with this.
No,
Not
for
the
sure.
energy, right?
Yeah. Yeah.
Anyway, let's just jump right into it. We have so much content here that we need to talk about it. Let's go right into what everybody's thinking about, and that's short squeeze mania,
Yeah.
right?
Yeah.
That's not. I didn't coin it that way. I obviously stole that from somewhere, but that's exactly what it is. I
Yeah.
mean, my take on it is, I think the internet has realized its power, right?
Yeah.
As far as this is your classic big guy against little guy, and
Yeah.
the little guy is realized that he's actually bigger than the big guy in this case, which
Yeah.
is, before when people tried to rally and maybe take on, some of these funds, these hedge
Yeah.
funds,
Yeah.
that they couldn't do it now. I think
Yeah.
they realize that they have the capability because the
Mhm.
internet, everybody is just so vast now, and people can, or it's so well organized, and they can organize themselves and,
Yeah.
make big decisions and make significant changes, to
Yeah.
the market.
Yeah.
So, what do you think?
Yeah, for sure. I mean, look, did you want to say anything else before I talk here? Or are we good?
Oh, no, go
We good?
ahead.
Let's go. Yeah, yeah. No, look, I think I've read a lot over the weekend, as I'm sure you have as well, and you know, uh, it's one of these things, right? The retail people definitely have some power, but what the hedge fund business is really good at doing is jumping on the back of whatever's working.
Mhm.
So where they may have kind of pushed that ball down the hill, the hedge funds have jumped on these trades for sure. I mean, we look at so Melvin Capital had to come out with their end of month returns, right? So they're $12.5 billion December 31st, and they're 6 billion end of January. Like this guy just got his butt handed to him. And
Yeah.
so from that perspective, I think, you know, we talk about so much about risk management. Like either this guy should get fired or his risk manager, his oversight committee should get fired. Like I don't know, it doesn't matter how much risk you're taking. Use 50% of your value in 1 month. Like you just got lucky in the past. You just were taking on way too much risk and didn't know what you were doing. But more to your point about the Reddit subreddit group taking on GameStop and Melvin. Obviously, there have been a number of signals that they're looking at other companies as well. But yeah, GameStop go from hovering around 20 to I got to pull it up here because the intraday action on Friday was crazy. Yeah, so it went to was that Friday? No, I think it was Thursday. Yeah, Thursday it went to 483, back down to 112, and then finished the day kind of in the mid 200s. But what I saw happening across the board too is, as I'm sure you saw some of this, lots of people posting like forced sellouts. Robinhood coming in, TD, like some of these brokerage houses were coming out and just liquidating accounts.
Yeah.
You know, all these guys are gonna get fined and sued. Like there's no way you get out of this. Like they force them into selling, and so that made me thinking, why are they selling? And so they obviously don't have enough capital, I guess is what it comes down to. So there's a real kind of issue, systematic issue that's happened behind the scenes.
Yeah.
So yeah.
But what's interesting too is that Robinhood seems to be the real fall guy here, right? And it's not just them,
Yeah.
my understanding, but they seem to be the front runner on it and taking all the brunt of it.
Yeah, for sure. I think it's because they've been so public on this. We're that independent, we're that Robin Hood, right? We're taken from the rich and given to the poor. And so they've had that, free trading. You can do it another way. You don't need Wall Street. This is their message. But behind the scenes, like we know what they're doing, right? They're selling. The only reason they make money is because they sell their data flow to Citadel, right? And Citadel took that flow. While over in one hand, Citadel is saying, "Okay, Melvin, we're going to bail you out. So this will cost us 2 billion, but we're going to front run Robinhood over here and make 5 billion. So yeah, I mean, we still made 3 billion. We're good."
Yeah, for sure. I don't know. I think that this is gonna be the start. I think groups like this are gonna get organized, and I think they're already testing the market. Like, you saw they're giving it a go with silver, right?
Yep. Yep.
Find some the metals now, and I think they're just gonna continue to kind of try to find something that continues to work here.
Yeah, so it'll be interesting to see what they do this week. I mean, GameStop, we'll see how that trades if they decide to jump on another pony. I mean, silver coming into this, they weren't like the commercials weren't actually net short. So they're trying to do something a little different than they did with GameStop. But yeah, I think that they have the ability to be quite powerful. Obviously, if you listen to the Real Vision Daily Briefing there on Friday, right? We had that girl Lily, I think her name was, come on and talk about how people are trading this and the option strategies and kind of the idea of how there people are looking for a different way to make money, and it's more kind of quant computer, like a really kind of a combination of all of the things, right? You're getting all these people come together, and then you're getting a different style of trading as well, because we've seen, as we've talked about last week, right? We've seen call volumes bigger than the underlying equity volumes. So I think those two things are happening together.
Yeah.
Yeah.
Yeah, definitely. So as far as an advisor, and we talked about this on our client only
Yep.
weekly roundup is, do you look at opportunities like this for our
Mm.
client portfolios, or what do you find?
Yeah, I'd say that I'd need something else for it to make sense. Like with the Nokia, for example, that'd be something that could potentially fit in because they also have a good business, still trading at reasonable valuations. So if you could get a combo of that, and I know L brands, which we talked about, that was something that I'd liked, and it was something that was being squeezed as well. So you'd need kind of a combination setup. I wouldn't play it just from a pure momentum perspective. I'd also need some kind of other setup for me to think about it making sense.
Hmm.
Yeah.
But do you see, I mean, we talked about a whole new another way of trading, right? Do you see a momentum trading as something that becomes more popular then? Is that what's happening here? It's momentum trading. So,
So I think you could get quants kind of locking onto this. So there's some ETFs out there, exchange traded funds, that use machine learning into their system. So, you could see some of that. Actually, a company like ARC, right? Like they may come out with some kind of product that could trade around it. But there is an ETF, which I can't think of the name off the top of my head. We can get that out there later. But they use Watson to run their kind of machine learning algorithm to trade the markets. And so their system is built off looking for signals and then taking advantage of those signals. And so I think if you get that machine learning thinking, right, you get more of these activities, the computer and the system learns how to trade and identify them. So yeah, I guess it'd be kind of quasi momentum, but you really need that machine to be picking up these signals in order to trade that. Because right now you got, if you believe it, like this Reddit, I mean, I don't know how many they said is on the stream now, something like 7.5 million
Mhm.
of people that are in there communicating around this trading idea. So they, again, they'd still be driving idea generation, but the flows come so quickly and so fast. I mean, they couldn't pick up on them. They're just hoping and guessing. You'd need a computer to identify and trade it. And so I'd say it's momentum, but it's momentum with a learning kind of overlay.
Hmm. Interesting.
Yeah.
So how do you think this correlates kind of goes right into our next topic, which is how do you think this all correlates to the market being down, basically being the worst market since October 2020?
Yeah.
You think all of this is correlated, or do you think it's just coincidence, or why do you think it's down so much?
Yeah, so we definitely got an opposite start to January of last year. You know, we had a big blowout start at the start of the year here. And so I think that we got that, last year was a big run up until kind of first week of February, and then the wheels fell off. And we kind of had the opposite here. We did have a bit of a run out of the gate, and then we've kind of had selling basically since Biden took over. So I think that maybe there is a lot of fear that the market's overvalued and all these things, which we can talk about a bit more. But I think that the market's trying to figure out what to do here. And as for that kind of sell off, well, we did have options expiration on Friday. There is a big mismatch in returns. We talked little bit before, but I think we'll put those out there. Like the Dow's -2, Nasdaq's up 1.4. Excuse me, S&P in US dollars is up or is down 1.1%. Canadian dollars down 1%, and the S&P is down 0.5% this year. So, and then I go and look at individual stocks, which you're going to get a pretty different picture for what individual stocks are doing versus this, because I go down the board and like some of the companies that I like EOS Energy's up 7.5%. Nordstrom, like some of these consumer discretionaries, which I've said I think is a interesting sector to own right now, is up 15%. Overstock, which we've talked about a little bit, it's up 60%. So you get a pretty mixed return profile, and I think the sector is very important right now. And so I don't think they're necessarily connected. I think volatility's increased maybe as a result of some of this. So there may be some of that kind of vol spike, which is causing some concern in the broad market. But I think you really got to own the right sectors right now, and I think that plays a major part.
Yeah, for sure. I
Yep.
mean, I keep hearing, with the environment that we're in now, with everything just seeming to be on a rope for
Mm.
since last March, right? Big crash last March, and then everything just going straight up despite, continued negative news about COVID and the vaccines and all these types of things, and the economy and jobless rate and all this negative news, but the market continues to go up. So now we're
Yeah.
starting to hear, the word bubble come out.
Mm.
Uh, are we in that situation already where I think, the bubble just burst in March,
Yeah.
right? With the
Yeah.
news of the pandemic.
Yeah.
Everything absolutely tanked.
Yeah.
We're not even a year later and people are already talking we're in a bubble. Do you think that's
Yeah.
the case?
Well, I think we've been in a bubble for 5 years.
Yeah.
Yeah, like I mean, I think it was 2015, maybe it's 2014, 2015, when Ben Bernanke was still the central bank chair, and he started to talk about tapering, which is kind of pulling back on the stimulus they're putting in the markets. That would have been 2015, actually. Yeah. So he had what's called this taper tantrum. And so, the markets and the economy, I think, were at a place that they could have digested it at that point. And we would have had a bit of a challenge. The economy would have been a bit rocky. They would have pulled back. Interest rates would have moved higher, and then the world would have figured out how to grow again. But he panicked. He didn't want it to be his legacy, and he said, "Well, I made a mistake. We're not going to taper. We're going to keep rates low, and we're going to continue to buy assets." And so, as a result of that single decision, we can continued to stimulate, inflate, drive asset prices higher. So yeah, I think we've been in a bubble probably since then. But now I guess the question is this the biggest bubble? Like, is this as big as it gets? And I think the answer is no.
Yeah.
Yeah.
Well, I mean, and give us an example of like a real bubble, like the last big bubble was when? Like financial crisis?
Yeah, so I guess the financial crisis was a bubble from the perspective that there was too much debt in the system, not enough checks and balances. I guess it was a bubble. It was a pure real estate bubble. Was the great financial crisis.
Yeah.
I think about it a bit differently than the tech bubble, and this feels a bit more like that. Because you get a lot of these companies coming out with no earnings, they got a good idea, like kind of more of that. When the other one was a financial engineered bubble because they levered up and started selling these CDOs and commercial paper and just leverage on top of leverage, and that's what almost brought the financial system down. Um, and this one where I started talking about it. I think in my 2 years ago I called it the everything bubble, and so now we are 2 years later, and we're still in the everything bubble. And so so yes, um, we are bubbly, but it is a big direct inverse correlation to interest rates, right? We've had interest rates falling for 30 years, right? So, you got that kind of slow grind lower in rates, which the other side of that is obviously you're making your money worth a little bit less. So assets are inflating to kind of offset that falling knife, so to speak. Um, so yeah, we have bubbly assets, but I look at and for those of you that know me, like I've been bearish and bullish over the years, and 2 years ago bearish, and back to kind of, I'd say, moderately bullish short term. So I think you have to think of the fact that we're in a giant bubble. Um, but it's a result of low negative interest rates and stimulation from the central banks. And so unless you believe that you get somebody that comes in and says, hang on a second, I don't like this debt thing. We're gonna raise rates and we're gonna stop putting money into the system. And so if you think somebody like that comes along, then yeah, market's probably 80% overvalued.
That'll never happen, right? Like that'll never happen that they're gonna raise rates. And, I mean, not to what we saw in the past, right? Like it's almost like the system is afraid to fail now. They don't want
Yeah,
anybody to fail ever,
yeah,
right?
yeah.
Which has, it's just ultimately just gonna build and build and build till it all collapses, in my opinion. Don't you think? Or
Yeah,
that's
look,
kind of that's a negative view, right? But
well, it's
yeah,
an economic school of thought, right? All the central bankers think the same way. They think they
yeah,
can stimulate themselves out of the system here, right? So unless you get a unless you get an economist that looks at the world from the perspective where we need to raise rates and we
yeah,
need to tighten our balance sheet, and yeah, it's going to cause a lot of pain, and yeah, people are going to hate us. But in order for us to survive, this is what we need to do. You need someone with a lot of guts to do that, and you also need the offsetting politician, like whoever the leader is of that country, to have the same guts to say, I'm with you. We're going there." So I'd say I'd put it at,
We should do that. Or
what's
is
that?
that what you think we should do too? Or are you more on the we can stimulate ourselves out of this?
Well, it's impossible. You can't stimulate yourself out of this. Like
No, I know.
I think you have to, like I said, 2015, should they have done it? Absolutely.
Yeah.
And so, are they at the point now where they can do it? Well, yeah, of course, anybody can do it. And I think the country that does that, they're gonna be a super strong currency. They'll probably have a lot of power and strength, but nobody has the guts to do that. And I do that because it's going to cause a lot of people a lot of pain if you want to do that. um, so I think that if they expect, like, I mean, if the US expects that they want to maintain to be the world leader, they should do it, but they're not going to.
Yeah. Yeah, but isn't like I mean, my view on things like all things like that is like it's the natural cycle of things, right?
Hmm.
You have
Yeah.
good times and you have bad times, and you've got to, the reason why things fail is because they were meant to, right? Because they weren't operating properly for today's time, so it was time for them to go. It's like again, this is probably one of those Main Street versus Wall Street things where I just look at it logically from a Main Street, right? Every business has its cycle, right? Like a Blockbuster, for example, right? Well, people aren't renting or VHS tapes anymore,
Yeah.
right? Or
Yeah.
DVDs or whatever it is, right? To the
Yeah.
point where, oh, we stream it all live.
Yeah.
That company came to the end of its cycle,
Yeah.
right?
Yeah.
It was time for it to go, right? If we kept, because it was a big business, because if somebody just kept floating it and floating it and floating it, it's never
Yeah.
going to make money unless they change the way that they operate.
Yeah, so I think here is the crossroads that the US is at right now. They still maintain the power of the US dollar, which is, 80% of all clearing that happens in the world. So presently they're in a power position, but they don't I really think they're not thinking about this. But they're, because they're going to continue down this path, they think they can do this forever. They can't. And so what's gonna happen is what's gonna happen from what you're saying is that China's gonna be the world superpower, or India, or Europe. So somebody's gonna take the reins, and at some point, likely the IMF, was the International Monetary Fund, says we come to some kind of basket currency, which, we're going to clear trades, which will be part Canada, part Euro, part Sterling, part USD. And the US is 50% overvalued, US dollar. And when that happens, it is going to crush what's happening in the US. They're going to, not know what hit them. They're going to come back from a manufacturing perspective. They're going to survive. They're going to get through it. But you're going to have, that massive devaluation in the US dollar, which will be amazing for China and India and the Middle East and emerging markets and South Africa and Africa. They're all stuck with piles of US dollar debt right now. And if their debt goes down by 50%, like they're in a great spot.
Yeah.
Yeah.
Yeah, I couldn't agree more.
Yeah. 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 Yeah.
You know,
Yeah.
that is definitely something we're gonna delve into more. I think is and I think that we're gonna see that more and more as people just don't have a taste for dealing with pain anymore, and I just
No.
think it's a generational thing, right?
Yeah.
They
Yeah.
always find a way to avoid the pain
Yeah.
when it's the pill that they need the most, right? I don't know, I
Yeah.
feel like I'm negative. I'm a little too realist today.
I think
Don't you
so.
think?
Well, I think what's happens too, like you think about it and you see it. I mean, you've come into this market at an interesting time, right? So you're learning kind of and seeing a lot of different things. If you came into this market 20 years ago, I mean, you would have seen the world a bit differently. and we all approach it from our own perspective. And I think that the unique challenge with managing money is having your own perspective and view, but not letting it influence whether you're going to make a decision to make money for clients or not. And I think that's really kind of that challenge, right? You get stuck in, this is how it should be. Like Bernanke, should he have let rates rise? He should have. Like an idiot, he should have. But now he put the world in a bad spot, and I have to accept, and we have to accept that this is what's happening, and this is what they're doing, and then trade accordingly. They've put Janet Yellen in place to be secretary treasurer. She's going to do exactly what Bernanke did, and she's going to do exactly what all of the other secretary treasurers did, which is stimulate, stimulate, stimulate.
Yeah.
And so even if you disagree with it, which we both disagree with, you have to accept it and trade appropriately.
Yeah, for sure. Yeah, I mean, it's gonna yeah, the dogs behind you jumping up, rattling.
That's
Oh,
perfect. That's perfect.
yeah, exactly. Okay, well that's yeah, like I said, that's definitely a topic that we could probably have 3 shows worth for sure.
Yeah, and I mean, we put up on my annual presentation last week, right? I put up that one slide on valuations. There's kind of 20 points that you can look at: PE, EV to EBITDA. Like you look at kind of every one of those metrics is 97 or 100 percentile, right? So these are historic levels. Like every single valuation metric is off the charts.
Crazy. That's
Yeah,
crazy.
yeah,
All right, well, let's shift gears here and let's talk about uh, something that we see almost every day in the business that we're in, and that's talking about the greatest transfer of wealth
yep,
from one generation to the next. It's kind of a good segue because I think we're talking about everything that we do now as a direct reflection on, future generations.
sure.
And I think we're definitely seeing that, as advisors or our clientele is um I would say older. Well, some of them are certainly, right?
Yeah, yeah, yeah.
But we deal with things like estates all the time, and just the overall transfer of wealth and how that works. And there's obviously, and what I've learned is there's it's really a lot of strategy there in order to make
Sure.
sure that that passing of that wealth is seamless and you get the most value out of it for the next generation, right?
Yeah.
What's your thought? Your just your overview thought on that passing of generational wealth.
Yeah, so I think it's a big deal. Obviously, the statistics are quite big. What we've tried to do is try to make sure we have that multi-generation. So I think we got a number of clients where we have 4 generations, right? So we got kind of at all levels so that you can think about and plan effectively. When you have things spread over in different places, it's hard to effectively plan. However, I think that there's a lot of things that can be done. Yeah, I've had so many conversations with clients about, we're kind of in that spot where I think about it, where you got lots of people that are in kind of their, late 60s, early 70s. They've saved a lot of money. Their kids are pretty wealthy too. They've got good careers. And then they're thinking about their grandkids because their grandkids are starting out, right? They're in university, they're kind of at that age. And so I've had lots of conversations with clients about, well, I don't, my kids don't really need the money, like, but my grandkids aren't really young enough to manage the money yet. How can we do planning around that? So lots of conversations about that. But there's so many different things that you should think about. As simple as the TFSA, not everybody knows still the TFSA. You can name a beneficiary, anybody you want, and that goes tax free to them, which is different than the RSP. So, if you have a TFSA, you've grown it up nicely, you want to leave that directly to your grandkids, for example, you can name them as the beneficiary, goes directly to them tax free, versus the RSP, right? Where an RSP, The only person that it can go tax-free to is to the spouse. So you name the spouse as a beneficiary, it can go tax-free to them. But so there's lots of things you can do. You know, if you have a disabled kid, you could name them as a beneficiary to their RSP or RIF, and it could go tax-free to them as well. So look, I mean, you could do many segments on this in great detail, but you know, each person's um, setup is different. And you know, there's a lot of things to think about. You know, I recently had a client whose husband passed away in Quebec, and in Quebec you don't have joint right of survivorship. So if you don't do any pre-planning and saying, well, we got to make sure that, well, if all of the money's in the husband's hands, well, we might be 6-9 months before the wife or survivor gets access to that money. So you got to make sure you're planning and saying, let's make sure she's got some money so that we can settle the estate and then get the rest over to her. So there's a lot of planning things that need to happen in order to make sure you're prepared.
Right. Yeah, that was one of the things that surprised me the most when I first got into this was how long it takes to
Yeah,
all these things, right? Like some of them take a year,
yeah, yeah,
more I guess,
yeah,
in
yeah.
that case. But I guess
Well,
there's
yeah.
tax implications with states as well, right?
Yeah, so lots of tax implications. That's certainly something to think about. Obviously, if you have a big RSP or RIF, that becomes taxable income when you die. You know, I still have conversations with clients about that still don't understand that. You know, so from a simple perspective, you know, the second spouse dies, they got $1 million in their RIF. Do you know how much tax they pay on that? Right? They pay that at to the top marginal tax rate, right? So it's essentially like you died receiving $1 million of income in your final year.
Mm.
So, you know, $500,000 goes directly to the government of Canada. Thank you.
Wow.
Yeah.
I guess I mean the conversation is more for about taxes, I guess. But I'm sure there's strategies to avoid paying that much, right?
Definitely planning strategies. In a case like that, there'd be potentially some insurance that you could do to help offset some of that tax. You know, a lot of times too, if there's a family cottage, you would do something like that, right? So there'd be an insurance policy for the kids or grandkids that'll pay for any of the capital gains tax on the family cottage. But oftentimes you'd see some kind of insurance planning around it, so you got a quick offset from a tax perspective. You know, with an insurance policy, you have, you know, you don't need a lot of things to get the proceeds from insurance policy. You know, it's a lot quicker than if you know, some of the other assets. Like all you need is a death certificate typically, and you get the proceeds from an insurance policy in a couple of weeks to maybe a month and a half, something like that, versus trying to settle a estate that, as you said, could take a year.
Yeah.
Yeah.
So, you know, uh, besides having a will, right? Let's put that as the first step.
Yeah.
What people, like if people are listening to this or watching this and they say, "Oh man, that's something I really want to look into." What's the first step they need to do in order to be like to actually have a plan around that?
Yeah, so it's a great question. I mean, you know, we had Tom Deans on in December, and Tom gave us that Willing Wisdom Index that we paid for, and that's a great tool to access. And you know, certainly if somebody who's watching this wants to access that, they can send you an email, right?
Yeah.
And that'd be a good place to kind of give you some thinking, like it's a thought process around some of the things you should be thinking about. But the will is certainly the template. Um, you know, people typically as well want to put in those power of attorney for finance and power of attorney for health, and you kind of want them separately. You know, that the whole concept that Tom has around that family meeting as well, I think is really important. And so, you know, I'd say those things are worth thinking about and exploring. I mean, the
Yeah.
will is good, but it's only really going to be effective and simple for your next generation if you've had conversations with them. And we see this every day. Like the amount of conversations I see after the fact from the families where they say, you know dad wanted me to have this, or mom wanted me to have this, or we agreed on this. So I think that kind of best thing you can do from a planning perspective is make sure you're talking to your heirs and having conversations and kind of telling them what you're thinking, what your plans are. And so it's pretty uncomfortable for a lot of people, but I think that's something very powerful to look at.
For sure, for sure. Yeah, maybe what I'll do is I'll link the Tom Dean's interview in this podcast as well, and
Yeah,
then
that'd
or
be good.
haven't heard it yet, they can certainly go to that. Same thing with the Willing Wisdom Index
Yep,
as well. It's a great tool that we offer our clients as well. All right, well, man, the time flies when we have these things,
for
right?
sure. Yeah,
You would
for
start
sure.
out thinking, oh man, you got your notes here, and you're like, oh, this is like 20 minutes conversation.
Yeah,
40 minutes later,
yeah,
you got a full episode.
for sure.
So anyway, do you have anything else you want to?
Yeah, I mean, I think that obviously it'll be an interesting week ahead with what's happening with the short squeezes. I've seen some references to some concerns about the plumbing in the financial system, which has given me some issues and some concerns. I'm generally tilted towards the bullish side, but if I read and start getting getting concerned about the fact that there's some, one of these firms has issues with being able to clear trades and have enough cash. I know Robinhood's been trying to raise $1 billion this weekend from its private shareholders. So, if it comes out that Robinhood can't clear trades anymore, this market could be an issue. And Robinhood actually isn't the one that clears the trades. Apex is the custodian that sits behind them. But that'll be something interesting to watch this week.
Yeah, definitely.
Yeah,
Yeah, well, I'm sure. Hey, the way that the world's going now, we will never run out of topics for this podcast.
that's for sure.
All right, well, that's episode 4 in the bank, in the books, in the
Awesome.
vault, in whatever you want to call it.
Yeah,
All right, so we'll see you next week.
sounds good. Awesome.
Okay.
All right. Take care.